Hello and welcome. Today is Friday, 16th day of October 2015. My name is Derek, and let's put two charts on. First one being this one on silver premiums, the second the weekly chart for silver. I'm unable to use a screen recording software, so the mouse pointer in color and my black lines that I usually draw, unfortunately, I'm not going to be able to do, so I'll try to make this as precise as possible, quick and easy to understand. As I've been talking within this chart a month ago, the premiums rose over 40% on the Eagles and breaking 25% above on Maples, while premiums no longer going higher. The mintage from the U.S. Mint this month is still $2 million for half a month. That's, I'm not going to say that's low or high. It's pretty much been where it's at over the last so many few months, which has been high. So it's cheaper to buy it, at least at this particular site. I'm sure all sites are following in the same direction as well. For lower premiums, if you're looking to buy, I think this is a small reason to want to, because you're getting a 3-4% cheaper price on spot than you were last week. And well, look at the numbers up top. $20.52 Canadian for silver when it closed last Friday. It gained 32 cents, or about 1.5%. But to buy a tube of Eagles went down $9, or about 1.8%. So you can see there that a little bit of a difference. Premiums, of course, have been very high. And that's what this particular chart is showing. Now, as far as the weekly price action chart is concerned, the price in US dollars is barely over 16 at 16.03, up 1.33% for the week. And I want to target on the last four candles, starting with the red one. At that point, 4 weeks ago, it was still in that bottoming phase, breaking, of course, the lows barely from the last year and stabilizing in the range of the low 14s to the upper 14s. But on that red candle, what we've seen, it followed an up week. It started the week off by selling, but only giving back a percentage of what it gained, closing relatively close to where it had started. The third final week, the first green candle, same thing. This time it retraced a lot more. It went down from 15 and about 15.15 down to about 14 2/5. So it went down about 80 cents and then rose the rest of the week. Last week it was an up week. This week, it was a week with a higher high and higher low from the previous one. So basically now, this is the second consecutive week with a higher high, higher low. First time since January that it has been above the 18 average of highs as its lowest price. And when we get this situation from what has been a bear market, now I need to see resistance be established. It could be now. It could be all the way up to the 1693 Fibonacci level. But at that point, I'd be looking for the next retracement to find support. Obvious support right now is the summer highs of roughly 15.5 to 15.75. That range there would be a key support point. But there are so many resistance points. You got Fibonacci, you got the two highs from this year, you got the next Fibonacci around 19, and then you got the two highs at the start of the chart from 2014 at around 21. And there's even so many points after that. It has still lost 2/3 of its value from both the 2011 and 1980 highs. And that will be it for today's commentary. I'll try to put out a video again in the next few days. I've had a lot of stuff going on, and I've been very busy, but not as busy now. So I'll talk to you later. Bye-bye.